Hello and welcome everybody, it's Stephen and I'm a popular investor on the Etoro platform. So many of you will know that I've done a lot of videos recently where I try to encourage as many new investors to learn about how to invest and try to learn some key concepts and answer your questions on investing. I think this has gone down pretty well so far in the community, so I plan to keep these videos coming. So today I'm going to be talking about a subject which I think has affected you all at some stage, and that subject is how to keep your self-discipline when investing. Just before I move on to the video, if you could please like and subscribe to my channel, it will really help me get a lot further reach for my investing videos. Also visit my new website, which is www.stephenbudgen.com. So as we move on to the video and how to keep your self-discipline when investing. So the most important point of keeping your self-discipline is to make sure that you have a strategy in place, and that you not only have a strategy in place, that you are disciplined enough to be able to carry it out. This is very important. So for example, when you're looking at buying a stock, do you know what your time horizons are when buying that stock? Is it a stock that you're looking to hold for 1 year, 2 years, or even 3 years? Or is it something that when it gets to a certain price, you would like to sell that stock? I think it's important to try and set out as much information as you can when getting into investing, especially when you are new to investing, so you don't get swept away by the emotions of it all. Also, if you want to put in stop losses in place to make sure you limit your downside risk of a particular stock, then do so, but make sure you also don't set those too tightly so you get stopped out as well. So have that strategy in mind when you are investing. The second most important point is don't get too wrapped up and listen too much to what other people say when selecting different assets. It's very easy to follow blindly recommendations, either from people that you think that know a lot about investing, or even your friends or your relatives. But if you do invest in those stocks, you must make sure that you do the necessary due diligence yourself. Because if you do the due diligence yourself, you will have more conviction going forward than if you blindly follow someone. It goes down, you get scared, and then you sell. So you don't want to be in that situation. You also don't want to chase meme stocks or chase stocks that don't have any fundamentals and that are only going up because of price speculation. You know, many people will get over enamored by these sudden rises, and all it really is your body's endorphins actually kicking in and giving you this kind of fear of missing out. This is not disciplined behavior. So make sure that if you are choosing stocks that are going up, that you're choosing them for the right reasons, and that is that you think they have future growth ahead. We also live in a world with a lot of distractions. You know, many people have full-time jobs, and they also have family commitments, which makes them very busy. So I'm not suggesting that you invest an inordinate amount of time on understanding the market. However, I think it is very important that you are able to allocate a certain amount of time each week or each day to be able to study those markets and do due diligence on stocks. If you're not inclined to do that, then you may want to spend that time analyzing and looking what other popular investors are doing. By allocating that time, make sure it is undistracted times. You're not checking Twitter, you're not checking Facebook in between, and that you are actually taking the time to really look into what you need to do and how you need to educate yourself. So make sure you have undistracted time. The last point I wanted to make is don't flicker in and out of investments. There's no point in getting into an investment if you are just going to sell at the first sign that there's going to be a little bit of red in the market. You need to have that conviction in that asset that you've invested in and really give it time. And it's the same with popular investors. There's no point in just copying them for a short amount of time and expecting the best results in a couple of days. It doesn't happen like that, and the best investments take time. The only person that's going to get rich from you flicking in and out of trades is the broker. You must make sure that you have the self-discipline. So thank you very much. I hope that video was informative for you. And as usual, please leave your comments below and I'll be happy to get back to you and answer any in the future. Also, if you have any other ideas for future videos, I'd be happy to listen to them. Thank you very much and have a great week ahead. Goodbye.